Awesome. So I just wanted to give everyone an opportunity to pop in here. I know this is an unannounced live feed. We're actually coming to you from my new location here in Virginia Beach. This is my new home. This is where all the future live feeds are going to occur from. And I had a comment from one of my subscribers come through the network, giving me a compliment regarding my videos. And it was pretty cool. The comment was basically stating it's almost like somebody sitting across the couch from you talking to a friend. And I really took that to heart. I thought it was a really, really cool thing to say. But I'm going to leave this live feed. I put these online after they're completed. I'm going to be unavailable for the next month. I will be unavailable for the entire month of July. I thank you guys for the latitude on the channel. I worked very, very hard putting my first installment of around 175 videos online. Certainly those will stay there ready for your view. You can go back and review a lot of my old catalog. The development of the channel, it's been interesting to watch the channel evolve. I don't know if I've taken the typical YouTube evolution. We just passed 5,000 subscribers. I'm very proud of that, but quite honestly, I prescribe to a little bit different metrics when it comes to success over YouTube. What I mean by that is I only look at this channel, the Independent Investor channel, as being a group, a community group of folks who are aspiring to a new idea, okay? And just because I'm the one that delivers the message, I'm a subscriber to this channel just like anybody else is. And I really want to make sure that people feel like there's that sense of ownership over the message, in that if they do listen to the message and they may not understand the message right up front, but I want everybody that's new to the channel to really sit back and really kind of absorb what's been passed. I've had a few folks kind of reach out to me and say, you know, Ryan, I don't understand this. You know, what do I do? You really, really need to take a step back, because I'm throwing out new concepts for people with regard to independent investing or self-directed investing. And a lot of people, by the name, what it means, when people see that, you know, they want to throw up a red flag right away. And I'm quite certain that there's a lot of statistics out there that show that people don't have a lot of success as investing on their own. And I know why that is. A lot of people are not given the proper steps to take to prepare yourself to enter into the stock market as a self-directed investor. And those are things that we talk about all the time. So for example, when I talk about stock picks on my channel, the last thing that I want to see you guys do is rush out and buy the first stock that I recommend. You just can't do this, okay? There's an order and a sequence. And if there's anything that I expect my listening audience to really, really understand, is that there's a lot of preparation time that is necessary before you even enter into the stock market, let alone buy single stock, okay? You have to go through the stages. And I talk about this in depth. Look, the last thing that I want to see is information that's put across on the channel get taken and misapplied, okay? If you hear, okay, Ryan recommended 3M, all right, and the first thing that you do is rush out and buy 3M without an understanding of your risk tolerance and what it means to be a single stock investor, the last thing I want to see you do is go out and rush into single stock exposure without really understanding what it is you're getting involved with. And this is one of those things that I really, really try to premise. And one thing that we've talked about in the history and the evolution of the channel is the order of investing, okay? And we will continue to hit on this topic. And I think a lot of people, why they view the Independent Investor channel is they really like the support that I offer in the message. And we'll continue to deliver these same themes over and over and over again. Why do we do that? Because it's worth it. These themes are worth putting out there and discussing openly, because this is a topic Money is not a topic that gets discussed very often, okay? I talk all the time. Bring up money with your friends, or next time you have friends over, try to talk about investments or money. It's one of those things that people just don't talk about very often. And I think deep down inside, a lot of people really would love to have more of an open discussion with somebody that they can trust with regard to options out there and things that you can do with your money. Now, I bring an option to the table that is not very common at all. Okay. And that's a lot of the reason why I think we've got a beautiful thing going on YouTube is with the niche on the channel. So I've got a few guys coming in here. I know I'm popping this off as a makeup for my Friday session, and I haven't done any uploads for a couple of weeks. And I know this is going to probably catch a few folks off guard, and that is fine, but it will be my last upload for a month. And I really like these live feeds, but I really wanted to touch on 3 points of what we've discussed in the channel's history, kind of in celebration of meeting the 5,000 subscriber milestone, kind of give you my thoughts of what that actually means, okay? I know there's a few folks that are really loyal subscribers, and quite honestly, I had a following of about 30, 40, sometimes 50 people during my live feeds. Those honestly mean more to me than anything. I could really kind of care less about the subscriber number at the bottom of my channel. Because at the end of the day, I really want to make sure that the information that we're putting out there, people can sit back and really relate with the message that's coming across the channel, because I try to put forward the greatest percentage of information that somebody can listen to and say, okay, hold on a second. Ryan's talking about the order of investing. What does he mean by that? Well, I've made videos on the order of investing, right? Debt elimination, looking at your budget, getting some savings put away, starting the right account, right? All these things are preliminary things before we even look at buying passive investment products or single stock in the stock market. You have to go through those preliminary stages in sequence. And some of my coolest videos, or some of the videos in my catalog, are some of the videos that I'm most proud of, and really not a lot of people have seen it yet. I know I'm getting a lot of exposure via share, and I know Google is picking up some of my content now on the metrics, okay? And I'm going to get to some of your guys' questions. If you do have some questions or comments for the channel, definitely throw those on there, man. I'm going to work this like I typically work on my typical live stream. I'm going to be on here for an hour and a half, so don't worry about not getting your question answered. And again, I know this is going to be off schedule, so it's going to catch some people off guard, but I will be putting this content online for you guys to view at a later time that's more convenient to you guys. But thank you to you guys that have made your way into the group. I know most people on a Saturday afternoon are really, really busy. I will be taking a flight tomorrow to California, actually, for a course that I've got out there for a month. And hopefully I can catch some wine tasting. If there's anybody that lives out there in the San Francisco area, hit me up and let me know. That's where I'm going to be. I'm going to try to maybe make my way up to Oregon if I can. I can surprise the family. So this is kind of a test to see if mom's catching my live feed, or if she catches this. It'll be kind of fun. But anyway, I will be indisposed out there. But definitely wanted to put out some of the channel pulses that I've got. Certainly some things geopolitically that we need to be in tune with right now with the stock market. The last 2 days were really on fire. I took a $3,000 appreciation over the last couple of days in stocks. We went on an 8-day downturn. So those two days of appreciation were quite nice in the stock market. But the tariffs went in place last night, effective midnight, and that is definitely something to keep in mind. Monitor how this thing unfolds. I am 100% in favor of doing what we're doing right now. I feel like all too often for the last 20 years, the United States has basically just rolled over for other countries, and those countries have gained a significant amount of wealth. So I'm very curious to know how this geopolitical risk is going to pan out. If it ends up cutting a little too deep, I think stocks are going to suffer. That's just the way of it. And if they do suffer and go into a little bit of a correction territory, I will be implementing one of my defensive strategies of turning it off. I'll pick something else out to do other than stare at my computer screen and hope for better days in the stock market. I will not be doing that, but something to definitely pay attention to. A lot of the new folks that are making their way to the channel, I would charge you with this. If you are not invested in this stock market, I'm going to tell you and everybody else that I address this topic with, you really need to approach this stock market in a defensive manner. Okay, so if you have 100% of investment capital that's ready to go into the stock market, and you've went through the preliminary stages of setting a budget, having some accessible discretionary cash, you've got some money saved up, and you've got the account started to where you are ready to deploy funds. Okay, I'm just going to use an example of $10,000. If you have $10,000 that you're ready to invest in the stock market, I would take $2,500, no more than $2,500, and that will be your starting position in the stock market right now. That is a defensive posture. It gives you plenty of accessible cash to access in case we go into one of those corrections, guys, and they are inevitable. They do happen and they will happen. But I definitely don't want somebody to come along and have an idea about the stock market in this euphoric phase that we're in right now and think that you just have insurmountable or an infinite amount of upside going forward, because I really think that's probably not a wise approach. Now, I didn't say don't invest. What I did say is that take a starter position in the stock market that you're comfortable with. And if you put $2,500 to work in, let's say, a passive asset, whether it be large cap, mid cap, or small cap ETFs, or you just buy the VOO, the S&P 500, that ensures that you're putting some money to work and will participate in some of the appreciation going forward. But if we do end up correcting, you're going to have some of those cash reserves to fall back on, okay? So that is my long-standing advice with regard to this stock market now. Now, you'll see when we enter into a bear market within the next 10 years, whenever that may be, that my posture is going to change. I'm going to get a little bit more aggressive on investing more capital in a bear market, as opposed to right now, we're at probably the later innings of a bull market cycle. And right now we're kind of in that euphoric state. And I think with the volatility that's picked up in the stock market, I really think there's some underlying signals right now that the stock market may be kind of petering out. I actually think that we're probably okay for the remainder of 2018 to get some of those starter positions in the stock market. But I implore you, don't be in a rush, okay? Don't rush into the stock market. It's exciting becoming an investor, okay? But there are exciting things about being a stock market investor, and there's also some things that you probably haven't experienced, like owning a stock and watching it take a haircut 30, 40%, okay? Watching the stock market go down 30, 40%. It's happened to me already twice in my young life, okay, in my 25 years of investing. So don't think that it can't happen. It absolutely will happen. And the success of your program will be built upon the firm foundation that you've built initially to make sure that you're setting yourself up to make sure that you can absorb those downturns when they happen, okay? Don't just frivolously throw money at the stock market, all right? A lot of the things that I talk about on the channel is the strength of your account. Guys, you're not going to hear this information anywhere else. And M1 Finance has come up quite a bit in my discussion with other channel creators, and it's come up through my community discussion with regard to what account you should open. Guys, if I had it to do over again, I would absolutely look at the M1 Finance option. If you haven't started your investment account, they give a significant benefit to Robinhood. Not only do they allow you to trade stock for free, but they also do portfolio balancing for you, and they also allow you to buy partial stock in, let's say, Google, right, which is trading for around $1,150 right now. If you wanted to buy $100 worth of exposure and over the course of the year invest $100 a month in Google, you could do that. And at the end of the year, you would own 1 share of Google, because some of the stocks that are trading and a lot of the blue chip companies that I recommend, guys, right, they're trading at $100, $200 a share. And a lot of people look at that and think that a stock is expensive. That's not necessarily true. It's all on a relative basis, all right, when you're looking at getting involved in the stock market. And the last thing that M1 has that Robinhood does not have is retirement accounts. They have self-directed investing through M1 Finance, okay? I really would like to not talk about Robinhood anymore on this channel because it will not be a credible brokerage account that I recommend. Now, if you already have the self-directed account with your brokerage account like I do, then Robinhood can fit in a certain portfolio. But the last thing I want to see you guys do is rush out and start your Robinhood account first, okay? We need to be looking at the retirement account as the primary account that we look to start when we are looking to start and get entered into the stock market after some of those fundamental preliminary stages are completed. Guys, I want to get over, I've got the finance guy, I believe is a channel creator. I don't check out a lot of other channels. I told Ryan Scribner directly that I don't watch his videos. I don't have time. I really don't. I make time to put content out there for you guys, and that's just what I do. I've got Daryl Rika on the line. Thank you so much for joining. I really appreciate it. We are filming from Virginia Beach, man. I am loving this area. I'm really loving the new home. It's a lot different than New York City. Please understand, I don't have the set up. We actually took the option of taking an apartment over buying a home down here. We are actively looking right now, but the price point just really didn't justify the means for us, right? And I've got a very, very solid plan. And right now, getting involved in a real estate deal really isn't the best thing for me. So we actually decided to take a high amenity apartment complex. We're very happy with that. So really glad you guys stuck with me through the transition of the channel. The Ryan Scribner video collaboration that I did with him generated a lot of new activity. For anybody out there that is a new subscriber to the channel, I really want to welcome you to the channel and thank you for subscribing to the message. I'm not one of those guys that puts my message out there with a me and you mentality. I'm putting my message out there with a community, with an us type of mentality. I've said it many, many times. I am a subscriber to this message. So anything that I talk about, when I put forth portfolio building techniques, when I put forth stock picks, when I put forth fundamental budgeting, when I'm putting forth fundamental aspects of having cash reserves on the side, make no mistake, these are things that I do. I do these personally, and I try to be as transparent as I can on the channel. And I try to put a lot more transparency out there on my channel than a lot of other channels seemingly don't do. I watch a lot of channel creators that have a significantly bigger subscriber base than I do. And I still am confused as to what they actually have, what it is they actually do in the stock market. You know, I question some of the techniques and tactics that they put out there, full well knowing that people are going to take that advice and look to deploy those techniques in the stock market. Now, I don't mean to impugn the work of those other channels at all, but in all honesty, I would highly advocate for you guys to really be critical of the content that you choose to consume, okay? And I really, really try to be as aggressive as I can to put content out there, not to waste your guys' freaking time. I don't. I'm not looking to waste your time. And again, the last thing I want to do is put forth information out there that is going to hurt you. But at the end of the day, if you're going to become an investor, at some point, you need to identify yourself as a non-investor and identify the steps necessary to enter from a non-investor to an investor, okay? And there's a lot of things that I can tell you to prepare you to enter into becoming an investor, okay? But at the end of the day, if you review some of the ETF products that I recommend, if you look through the 507 companies that I recommend that are represented in the S&P 500, if you look through those companies, you are going to find that to become an investor, at some point, you are looking to gain exposure in either big blue chip companies within different sectors of the stock market. My point is, at some point, you're going to have to buy something, okay? You're going to have to put your dollars or pledge your dollars to work in an ETF, a passive vehicle, or a stock that is going to seemingly enjoy some appreciation of those companies, either as a group or as a singular entity, okay? And a lot of people tend to look at the stock purchase and beat me up over it, and they don't really understand that there's so much evolution that a new investor has to go through before they enter into single stock or ETF exposure, okay? If you've got the budget under control and you've set aside some spending cash, maybe curtailed some of your spending, maybe you've identified and looked in the mirror and you've asked yourself, do I want to become an investor? For a lot of people, that's really scary. Once you've gone through those preliminary stages, have you identified the account that you want to open to help you meet your financial goals down the line? All right. We talk about the two most important aspects on my channel that all too often other channel creators are missing because they are too busy talking about L brands over here, and they miss what account are you opening and what are you seemingly looking to achieve in opening that account. Are you opening a brokerage? Are you opening a retirement account? And why? What are the benefits of those accounts? If I open a brokerage account, what do I get out of that? Can I buy it and sell stock in a brokerage account? What are the implications of doing so? Should I open a brokerage account first as opposed to a retirement account? Okay? Those types of things are not being discussed in depth, and I don't know why. I don't know if it's an inability to discuss those topics or if everybody just wants to gravitate toward the sexy side of the stock market, right? This is all the sexy stuff over here. This is buy a stock, get paid a dividend, or buy a high growth name like Facebook and you're going to make all kinds of money. This is the latter piece. There is no recognition whatsoever to the fundamental portion of evolving from a non-investor to an investor. All right. There's no fair acknowledgement to that. And I've had some recent comments come through the channel talking about recommending single stock to a new investor. Okay. If you think for a second that that is the totality of my message, you need to go back and you need to review all the fundamental premises that I talk about all the time of taking yourself from a non-investor to an investor, all the mental barriers that you need to get over. You need to open your mind a little bit to new concepts, okay? Now, stock investing is not for everyone, okay? And I would advocate that you need to prove to me, and this is some of the benefits of the Facebook group, is that you can throw out some stock picks and say, hey, Ryan, what do you think? And I'll give you my honest opinion of it. But if you are not properly prepared to enter into single stock allocation, you do not need to be messing with single stock allocation. I say it all the time. It took me 7 years before I entered my Roth IRAs. As a matter of fact, there was a significant amount of years that came and went, and I never owned a single stock. I would say that 7 years passed. I was with Edward Jones before I even bought my first blue chip company. It was AT&T and it was Kraft Foods at the time. Okay, those were the first two stocks that I owned. And I just think that there's a lot of channel creators out there that need to focus more on the fundamental aspect. This is a lot of reason why a lot of people enter into the stock market with excitement and they get top heavy over here and just buy a couple stocks and those stocks go down 20% and they wonder why. It's because they did not mentally prepare. They did not set up a cash savings, that they did not put the stocks in the right account, right? They started that Robinhood account. And by God, they're an investor over here, which you are, but you didn't go through those preliminary stages, and those preliminary stages can really prepare you if you've gone through those phases and given yourself an honest effort at those phases to eventually enter into some of those cornerstone positions that I talk about in the portfolio. It's very, very important. And I just wanted to review that premise that I put forth on the message over about the year and a half that we've had the channel, in recognition of the 5,000 subscriber milestone that we just passed. And again, I want to thank you guys for that. So I've got a few guys here, and I don't know if, yes, I did make chief. It's interesting being a chief, that's for sure. It's a lot different. People treat you different, which is kind of not really something that I'm all about. I'm still Ryan. I really am, but I just have a lot more responsibility as a chief, and I take that very seriously. I thank you so much. Trying to talk with investing with the majority of my friends is like trying to talk about growing tomatoes to the gaming community. Most of them don't care about tomatoes. And you're exactly right. I don't know. You could probably make a series of YouTube videos. I'm addressing the finance guy. And that's so true. And it's something that I really don't understand. It's a fickle topic for most people. It's my favorite subject. I love it when I meet somebody and I've got something in common with them with regard to stock investing. I had a colleague at work who loved to buy micro cap companies. That was his thing, and he was very successful at it. Mine and his philosophies about investing were completely different, but it was really just cool to hear out some of those ideas about, what companies he was investing in, why he did that, what were some of his premises and fundamental philosophies about money. And I just think all too often we really take for granted the opportunity that we have to look to become an investor. A lot of people, may not resonate with the idea of becoming an investor because they have some struggles about making ends meet. But I think in a lot of those situations, I think if we looked really, really hard at the budget, and we really looked hard at the inflow of money that's coming in via income, I really think a lot of those people, if they took a hard look at it and they really, really wanted to become an investor, some people do not. You talk about the tomatoes or, the people out there that really don't have it. They're not interested in the topic at all. And that's kind of part of the criteria. And I can excite a lot of people. A lot of people know, that I make less than the median income in the United States, and I've built a portfolio that demands a level of respect. And I don't mean to put that out there. I've built that portfolio over the course of a lot of years. I've bought and sold a lot of stock. I've bought and held a lot of stock. I've made some mistakes, but I think it's worth recognizing the fact that just a normal working class guy like myself can experience a better than average level of success in the stock market. And that's the testimonial that I look to provide to you guys. Thank you for that comment. I don't know why it's that way, but it is, and it'll continue to be that way. We're not looking to revolutionize, people's misconceptions about money. But what we are looking to do is offer an alternative strategy to entering the stock market as a self-directed investor. And if I wasn't interested in money, but I posed that topic to somebody that wasn't interested in money, who's to say that we're not going to spark a little bit of interest into somebody and say, you know what, I've always been told don't go in and go with a financial planner, but what's this option about? Can you tell me a little bit more about it, Ryan? And that's kind of what a lot of the theme of the messages that we look to put across on the channel is. That very niche right there is the prospects of self-directed investing, because not a lot of people know about this. And it's a lot of the reason why a non-social media type of guy, a guy that has a regular day job, is sitting across the couch from you guys 175 videos deep and 5,000 subscribers later and putting forth this message. Because I know if you guys hear the message, don't bastardize the information, right? The comment that I was referring to that said, Ryan, you're recommending single stock to people, you shouldn't be doing that. That's somebody who's bastardized the message that I'm looking to put across and has taken a very, very sincere message and misconstrued the message with more potential to hurt somebody if they just go out and buy single stock tomorrow without really hearing the underlying premise behind the message. Very, very important key takeaway. Very, very important. Another thing that kind of gets missed, and the last thing that I'll talk about in reviewing the channel's success over the last chronicle of videos, is the benefits that you will not be charged for as a self-directed investor, right? The dollar cost averaging program. There's a method to my madness. There really is. The reason why I advocate all the time for the self-directed account is that you're able to do dollar cost averaging free of charge, okay? And a lot of people who have been with a financial planner know that they'll put you into 4 assets just so they can charge you 5.75%, 5.75%, 5.75%, 5.75%. There's a reason why I repeat this information. It's because I want you to remember the fact that this dollar cost averaging, you're being charged for every single month. And it doesn't matter if you have $100 to invest every month on a dollar cost averaging program. If you're taking that $100 and they're splitting it $25 into 4 different accounts, so they can charge you 5.75, 5.75, 5 3/4, 5 3/4. They're doing that not having your best financial interest in mind. And this example that I talk about of these 4 accounts that was put forth for an investor, that happened to a family member of mine. That's a real example that I put forward. Now, in a self-directed account, you don't pay for a dollar cost averaging program. You don't pay at all, okay? Dollars that inflow into the account are done so free of charge. You're the one that links the accounts together, and you can fund the account at your disposal. Another thing that we talk about all the time is the dividend reinvestment program. So if somebody's hitting me up and saying, Ryan, you're recommending single stock to people, you should stop doing that because starting investors don't need to be investing in single stock. That might be true in a brokerage account, but there's a bigger picture to take in mind, okay? If I have a new investor and they have Walmart housed in a self-directed account, I know they can fund that account free of charge, and I know they can set Walmart up on a dividend reinvestment program over here, all right? So there's much more of a holistic picture over here to housing Walmart under the self-directed Roth IRA umbrella, full well knowing that those moves on that stock are going to be protected. And that is the key term that I talk about all the time. When I talk about wealth preservation, that's exactly what I'm talking about. Walmart in a self-directed account is going to act different than Walmart held over here in a brokerage account, okay? Now, depending on the brokerage account, you may save a little bit on the entry and exit fees, okay? But you may be charged in a managed situation, right, to buy Walmart, okay? I was charged upwards of $50 brokerage commission to buy single stock with Edward Jones, $50. And a lot of you guys who have tuned into my message know when I sold Duke Energy quite some many years ago, I had made a $1,700 profit. They took $300 of that profit as a broker commission. A broker commission? Good grief. It took me 2 days to get in there and actually get in and sit down with the financial planner to execute the trade. And I took a little bit of haircut on that too. So not only did the stock move back $200, but I was charged $300 to exit the position. So $50 to enter the position and $300 to exit the position. $350 on one stock trade. And that's the managed side of the house that we look to exploit. We look to expose all of those fees on the channel. We like to talk about that readily so people really, really understand their options before they go and they sit down at the oak desk with the fake plant in the corner with somebody wearing a suit and tie, okay? You'll get more value on the Independent Investor channel than 1,000 suits and ties. I say it all the time. I don't need to wear a suit and tie to deliver good, credible information to people because this stuff's legit. Go check it out for yourself, all right? I've got Doug on the line here. Thanks for joining on a Saturday afternoon. It's Saturday, of course, Eastern Standard Time. Just want to say hi, Ryan. Unfortunately, I'm up to the cottage. No worries. Your move went well. Thank you for the vote. I appreciate that. The move did go well. I would like it if you talked about index investing and also how to create wealth in the stock market. Yeah, so I'm addressing a very important question. I've got Calabra, I believe that's the question. I discussed this topic at length, and I will continue to evolve this discussion about wealth creation in the stock market. And I do absolutely talk about this topic. One of my most popular videos is comparing ETFs to index investing. And even though I am a big fan of both, I am more partial to ETF investing than I am in index investing, okay? There's some real specific, specific barriers to index investing, and it comes really down to a little bit higher cost for index investing. For example, for the Vanguard account, a lot of people know that I've cross-compared the investor shares and the Admiral shares that they offer on the Vanguard side of the house. The Admiral shares carry with it a $10,000 minimum requirement to start. The investor shares require a $3,000 minimum to start, okay? Now, the comparable ETF that I talk about all the time is going to get you into relatively the same holdings. I've seen no real difference between the holdings in the comparable ETF product than the index funds that they offer. And if you guys want to really educate yourself on this topic, because these live feeds, unless you're taking notes, you're really not going to remember everything that I talk about, but I highly recommend you go onto Vanguard and discover for yourself when you bring up a ticker symbol for an index funds like the VFSAX or the VTSAX or the VFINX, okay? A lot of these ticker symbols I just remember off the top of my head, but you'll see what I mean. If you don't remember the index funds ticker symbols, you'll remember VTI or the VOO, okay? And if you click on VOO on the Vanguard site, it's going to give you the option to check comparable index funds. If you click that, you're going to discover what I discovered, in that the holdings are very, very similar, and the performance over time is very, very similar, okay? But the freedom and flexibility to trade an ETF during the stock day is a big benefit as far as I'm concerned. Now, that wouldn't be the sole reason that I would go with an ETF over an index fund. The reason I would advocate for going with an ETF over an index fund comes right down to the freedom and flexibility of the ETF, but more specifically, it comes down to the low cost of ownership of that ETF. And if you compare the comparable fund of the VTI, which is 0.04 expense ratio, the VF or the VTSAX, I believe, is the comparable index fund to the ETF VTI. That expense ratio is going to run you 0.14 for the investor shares, okay? Now, the investor shares you can buy in any brokerage account. You don't have to be with Vanguard, but you are hampered with having that minimum investment amount requirement, or the minimum to invest of $3,000 in the investor share. And then the Admiral shares, of course, you have to have $10,000, and you're provided that benefit of the low expense, okay? So guys, we're splitting hairs a little bit on getting into the nuts and bolts and the weeds, and that's a lot of the benefit that I bring to the table, because I can talk about this off the cuff. But you're not going to resonate with the information if you're asking me to provide wealth building solutions for you in the stock market, if you're not going onto the Vanguard's website and educating yourself up and making these discoveries for yourself. Because it wasn't just till about 6 months ago that I actually discovered this on the Vanguard's website and identified with the extreme similarities of the holdings within the ETFs compared to the index funds. But a significant difference, quite frankly, when you're looking at a 0.04 expense ratio and a 0.14 expense ratio. And over time, that can make a huge difference in your bottom line on what you are able to take home. Remember, we want to reduce fees as much as we possibly can. And ETFs are the way that you absolutely can do that, okay? Now, a couple options that I talk about with building wealth in the stock market. I'm basically summarizing this for you in about 10 minutes. So if you guys don't catch all the gist of this wealth building question, I'm spending a lot of time on this question because it is a very important one. And we will continue to evolve this discussion as a community and continue to polish our message going forward so that everybody who's part of the community understands my perspective on this. Now, again, we're talking about the investment assets over here, okay? Never, ever lose sight of the fact that whatever assets we choose to build wealth in the stock market, as you put it, make sure that you are building wealth in the stock market underneath of a tax-protected and a wealth-preserved umbrella, okay? If I were going to ask a very, very critical question of somebody's portfolio, I would ask the question in this manner. I would say, what percentage of your assets are tax-protected and wealth and free of fees? Okay, what percentage? And I know a lot of you guys have 401ks out there as a fundamental basis, right? Those are not tax-protected, okay, right? Those are not free of fees, okay? And the success that you will have as building wealth in the stock market will be contingent upon your ability to identify what percentage of your dollars are tax protected and wealth preserved going forward. Okay. For me, it's almost 100%. I have just about as little expense as you can possibly have being part of the TSP as a military member. And then of course my self-directed account. Every dollar that's part of my self-directed account is tax protected and wealth preserved. And then I've got about 40 grand in the brokerage account, and none of that is tax protected, of course, and none of it's wealth preserved either. Okay, I do benefit from some wealth preservation in my brokerage account a little bit, but I think that your secret to wealth building in the stock market has to do with you identifying to filter into those accounts as much tax protected and wealth preserved dollars as you possibly can. So we split hairs on these investment products over here. But I always want to premise, if you do end up going with the VTI, great. It's a great product. If you end up going with the VT Sachs, that's a great index fund, okay? Those are going to win for you over the long term. That's why they continually come out my mouth. So when you talk about creating wealth in the stock market, that is absolutely how you do it, okay? Now, there's some other things with regard to saving a cash reserve, building an aggressive budget for yourself, okay? Buying precious metal can go into creating wealth. Now, your question was creating wealth in the stock market, okay? There's only a few avenues that you can go through. You can go through sector exposure with single stock allocation. You can go with index funds, as you pointed out, or you can go with ETFs. I don't talk about mutual funds on my show, and I don't talk about bond investing as much as I should, but it is going to become a criteria of my investing in your later years series that I put out. It was a very successful video, and I intend on, when I get back, finishing up that catalog and chronicle of videos coming through on my investing in my later years. And a lot of that is going to be contingent upon having at least 50% of your money in a bond fund. And if you want to have an idea about what bond funds I recommend, just go onto the Vanguard website. They're right there. Those are the best in the market. As far as I'm concerned, you can find short, medium term, and longer term bond funds. BND is my favorite. It's going to pay you a 3% dividend, and it's given a couple bits of appreciation. It's at least going to pace and slightly outpace inflation going forward on the bond side of the house. But that's a very, very open question. And if you have some specifics about what you want to see from me about building wealth in the stock market, I'm doing that now. I'm building wealth in the stock market now, and I'm very, very transparent about putting forth that information about what I have, what I've done to get there, guys. I hold nothing back. I don't hold secrets from my viewing audience. I want you to listen to what I'm saying about how I've built the wealth that I have in the stock market and sit back for a second and say, I can do that. I can do that. Hell, you can say, I can do it better, because a lot of you guys probably will, especially if you resonate with the message and you get involved earlier on in life. You'll have far more success in the stock market than I will, and I'll applaud you for doing so. Thank you for the questions. Very good. Hello, champ. Greenhorn Grill and Smoker, my restaurant owner. I love it. I've already talked to June Fan 11. You guys can call me Ryan on this. I'm just a subscriber to the channel, just like you guys are. I just deliver the message, and hopefully we're touching some bases really that you guys are putting to work to help you guys. So we will also continue on with portfolio building strategies as well. And I really want you guys to understand, when I put forward a message, okay, it's not all inclusive. Okay, there may be pieces of what I talk about that you can deploy in your life, and there may be pieces that don't apply to you. Okay, but what we try to do is provide a ton of different options out there, and there's not thousands of options. There's a few options as far as I'm concerned. Okay, as far as the account that you start, I recommend 5 brokers. Okay, and M1 is really kind of raising to the top. I'm going to probably be starting a brokerage account with M1 here shortly, so I can become familiar with the features on the platform. That way, when I recommend it to you guys, I can speak a little bit more from a perspective of a user as opposed to a secondary perspective, because these opinions that I give are based on secondary acknowledgement and happiness with the platform that they're offering. So good stuff. I'm going to scroll through here. Having cash reserves and paying off debts is one of my favorite things to tell people when starting. Yeah, it's one of those kind of unglamorous things that you really need to talk about. A lot of people are like, okay, Ryan, yeah. But until you put pen to paper, it's really kind of hard to earmark those things. And this was something that I did. I identified 3 things in my budget that I was able to cut out and really get aggressive on. And until you put the pen to the paper, I think a lot of people don't really realize that some of those sunken costs come and they go, and they could earmark a few $100s maybe in their budget that they could kind of streamline into a paying yourself first type of routine. And it's hard. A lot of people talk about it and they don't do it. To be honest with you, that is what I find in people. A lot of people are like, yes, I want to be an investor. Ryan, can I talk to you? And they'll sit down with me and I'll give them the spiel. I would do it for anybody. It's not a problem. But only to find out that I ask them a month or 2 months or 6 months down the line, hey, did you ever start investing? And the answer is no. I'll get around to it. We're always just too busy. And gosh, I all too often I think investing is misconstrued as something that is just going to take a ton of work, that's going to require too much time that people don't have. And I think a lot of people, if they just listen to what I'm talking about, investing is not going to happen overnight. Okay? Investing is something that just needs to start to become part of your life. Okay? And you can start small. Take it in chunks. Okay? Start looking at that budget. If you have a spouse, sit down with your spouse and start looking at the budget. Prove to yourself that you can pay yourself first. If you are part of the 50% in the United States that don't have $1,000 in your savings account, maybe it's time just to sit down and say, are we capable of doing this? Right? Are we capable of doing this? If you identify that you are capable of doing that, then the next step might be to say, Ryan talks about the importance of starting the account. Maybe we need to start looking at some of the brokerage houses that he recommends and start doing our homework a little bit. Doesn't need to happen overnight, right? You decide to take the plunge and you decide to start the accounts, okay? None of what I've talked about will cost you any money at all, okay? You start the account for free. Maybe you fund that account. Maybe you don't invest in any ETFs or stock to start. Maybe you start to prove to yourself that not only can you build your cash reserve, but you can also take $25 and funnel that into investing capital, right? That is fundamental wealth building in the stock market. It just doesn't get any more fundamental than that. And so hopefully a lot of those fundamental ideas can resonate with the masses. Because I think a lot of channel creators, they really fail to put forward a message of putting themselves in the position of their receiver or their customer. Okay, now I don't like that word, okay? And I don't like the word client. Oh, I hate that word client. It pisses me off when somebody calls me their client. This is my client. Shut up. Get over the formalities, okay? We're going to talk about money for a while, all right? Shut up. Get over the formalities, all right? Drop the suit and tie routine for just a second. It's so irritating, man, when people have to, like, I don't need to be your client, okay? It puts people at ease to know that they're going to, like, take a bunch of money after you leave the room, okay? You know? But those are some of the fundamental strategies that I really hope that we're putting across out there that can really help the masses. All right. Thanks for getting us started right. Glad you are back. Yeah, David, I think, you know, is there a right way? Gosh, I think I had some people are starting to come across them, and you know, one in particular kind of gave me a hard time, and I like constructive criticism, but the criticism that was passed, and quite frankly, if you're going to put it in writing, you need to own it, said that the information that I'm putting across is stupid. Okay? You need to give me a little bit more than that, okay? And if you're going to say that the information is stupid or not applicable to a new investor, you need to understand some of the preliminary premises behind the message. Is the message of single stock investing devoted to the masses? No, it's not. It's not. Single stock investing is not for everyone, okay? It's for those folks that have identified a risk tolerance that is acceptable to themselves in understanding the swings of single stock. So is there a right or wrong answer? Okay. I put out a video on definitives, and I find all the time that when people are talking in monies, they want to talk about definitives. They want to talk about ETF investing and index fund investing. One is right and one is wrong. Well, you have different brokerage houses out there offering a lot of different products. And I've had a lot of people hit me up on the iShares, I believe, are offered for free through Fidelity. The iShares comparable S&P 500 ETF or index fund might be a better option for you because you can trade that free of charge, right? So it can be a great option for you if you decide to go with that option free of charge, okay? So, you know, a lot of people hit me up and they say, gosh, you recommended Wells Fargo. That's wrong. Well, it may be wrong if going forward somebody takes a 20% haircut, okay? It may be right if somebody invests in Wells Fargo, takes the 20% haircut, waits out that 20% downturn, and sells it in the black. Now, that's a good stock investment or trade if that's what you want to do. I own Wells Fargo on the long. So when I recommend Wells Fargo, if somebody goes and buys Wells Fargo and then sells it 3 days later for a loss, is it my fault that I pushed out a stock pick like Wells Fargo? No, it's not. It's just that people want to talk all the time in definitives. So I always try to put forth a message that there's really no right or wrong answer, but you have to be open-minded when somebody says, hey, I've got this new idea. Sit back for a second and really understand the totality of what somebody's trying to say before you offer up some criticism like your message is stupid. Okay? And actually came back with some really good constructive criticism. I'm tough. I'm tough. I was offended by the comment insofar as anybody would be offended if you said that their information was stupid. Okay, that's an offensive statement. Okay, anybody would be offended by that. But what their point was why don't you offer some large cap ETF and mid cap ETF and small cap ETF? And if you're older, you can supplement the international ETF exposure with some bond exposure. Wonderful. That's a great, great plan. My question back to you is, are you housing those assets in a retirement account or a non-retirement account? If you're putting them in a non-retirement account, then your plan is stupid. Okay? So if we take those good quality assets and put them into a self-directed retirement account, yeah, okay, I'm on board with that plan, right? But we only get to that by meeting in the middle and understanding where you're coming from a perspective and where I'm coming from with my perspective. Thanks for the comment, David. I appreciate it. The live is not done yet. Somebody already disliked the live. Oh, that's okay. I don't mind. I actually think that that's probably a sign that I'm probably becoming discovered on YouTube, to be honest with you. When you start getting haters, I've got a lot of loyal plank owners on the channel that have probably deployed a lot of this information and are starting to resonate with this idea that I'm putting out there. And it doesn't come until you're paid your first dividend and you've set that for dividend reinvestment and you're like, wow, this feels pretty good. Thank you, Ryan. Wow. And Ryan didn't charge a dime for that information. Wow, that's pretty cool. Thanks, Ryan. You know, or I talk to my colleagues at work and they're like, wow, I got this YouTube guy that got me started on this self-directed investing program. I didn't have any idea before I came across his channel, and he didn't charge me anything for the information. Isn't that great? With that said, you're still going to have people that are coming on and disliking the channel. I don't think I'm a very likable guy. I don't have a lot of charisma. I don't get on here and look at my channel. I don't do that, and I won't do that because the way that I'm talking to you guys is the way I act at work. It's the way I act with my family. If I'm sitting with friends, if I'm barbecuing in the backyard, if I'm cooking some steak in the backyard, you're going to hear the exact same tone that you hear coming across YouTube. And that's all I can do is just be Ryan at the end of the day, as genuine as I can. Okay. If you want to see a difference in my approach, watch some of my first videos, man. I was pretty nervous. So the Ryan that you're actually seeing now, having the channel evolved from, 175 videos and 5,000 subscribers later is a little bit more indicative of who I am. And I want you guys to resonate with who I am, okay, what I do. I want you to feel like I'm just another guy sitting across the couch from you. I think that's pretty cool, actually. And it's kind of a refreshing change from some of the other YouTubers who get on there and they're like, smash the like button. I'm not polished like that. I just can't do that, and I won't do that. I'm not going to step outside myself and be somebody that I'm not. Not going to do it. So dislike all you want. It's not a problem. As long as we are affecting the people in the community that are taking this information and empowering themselves from the very beginning, that's what I said I'm all about. That's why I came out with the channel. So, yeah, I don't know. Maybe it's the light switch on the wall that's offensive to people. I don't really know. It doesn't really matter, to be honest with you. Thoughts on trading options? Yeah, so options is even above trading single stock in the hierarchy of risk. And I am not a big advocate of options. Right now, I'm eligible to trade put options in my brokerage account. They have a pretty strict $500,000 threshold for call options, which I would probably be more interested in because I do pay enough attention to stock to play momentum trades. I've had a lot of success trading stock. I win on a vast number of my stock trades. I'm pretty good at it, okay? But that's not exclusively what I do, okay? I am an investor first, and then I will take small positions in certain stocks that if I do take a downturn in that stock, I will hold it long. And if I do get some appreciation, I may look to trade out of the position to shore up cash or take profit off of the table. Okay, I do that. But I have traded some options before, and the option went crazy. I didn't know what I was doing. I've tried to read into options. Oh, I'm reading the rest of your comment here. You're talking about short-term and long-term call options. Yeah, I'm intrigued by the topic. And honestly, guys, I'm evolving an investor myself, and options is next on the chopping block for me. I'm actually more interested in getting some bond exposure and getting some exposure to gold and silver in the short to medium term. I may look at call options later on down in life when I've grown enough capital appreciation and grown enough wealth in the stock market that I can take and piece out a small piece to where I can kind of wet my whistle a little bit with call options. But I don't do a whole lot of it now for good reason, honestly. I don't day trade, and I don't really feel like I pay enough attention to what I believe is necessary for educating yourself and understanding, what call options can do for you. I'm more of a call option type of guy as opposed to hedging on the put side of the house, betting on a stock that may be going down instead. And some of the stocks that I hold, I can't buy 100 share blocks in Google, for example, and expect to pay that level of basically a put option is insurance on a stock going down, right? It's a hedge. I'm picking up the stock at a lower stock price. So I understand a lot about it. I'm intrigued by it, but it's not something really that I dabble in right now. And it's something I definitely do not recommend to new investors. And it's something that I would expect you guys in the hierarchy of the investment products that are out there to put that even in a higher risk category than single stock exposure. All right. What's the science behind the yearly rebalance of one's portfolio? That's a really good question. Sorry for not explaining, but you guys have heard me talk about sector exposure a lot on this channel, where I try to aim for 20% exposure in technology. I try to aim for 15% exposure in both healthcare and financials. I look to gain 10% exposure in industrials, okay? Now, you're never going to have perfect exposure. Telecom is 3%, materials is 3%, utilities is 3%, okay? So you're never going to have a perfect allocation, all right? But if you have a situation where technology really starts to outpace, you may find that your technology exposure maybe has changed from 17%, which is a little bit underweight the 20% as a benchmark, and has run up to 24%, okay? And the idea behind rebalancing is to maybe take some of that appreciation in a sector that has kind of outpaced a little bit and rotate that either into cash or rotate that into maybe another sector that maybe has underperformed the market. Perhaps maybe your 3% in the telecom sector has dropped from 3.5%, which is a touch overweight, down to 2.2%. And maybe you want to rebalance the portfolio and pick up a little bit more exposure in the telecom to always try to equalize those recommended thresholds in the account. And that's the idea behind rebalancing in a portfolio. And I do it manually in my account. Some functions like Betterment, the Betterment account does it automatically. It's really cool because it can kind of keep you on track to make sure that you don't have a runaway sector, a runaway sector in your portfolio start to really outpace, and you really start to get kind of out of balance in your portfolio. So a really good question there. And I know M1, that's a really good option that I do have one of my subscribers. I think they're a little bit older in their investment career. So they've got established careers, very nice folks, very awesome. They ended up opting for M1 as a primary option for their retirement. And they really like the functionality of having basically your pie on the screen and seeing where your money is allocated within your pie. So it's really cool. You can kind of set it up how you want your pie built, and the portfolio will rebalance over time. So very good question. Thank you for that. I really appreciate. Chuck Schwab IRA is tax protected. Yes, it is. It is. Thank you. And Charles Schwab is one of the top 5 brokers that I recommend. You got Chuck Schwab, you've got Fidelity, you've got TD Ameritrade, you've got M1, and I really like Merrill Edge. Not a lot of them in my community go with Merrill Edge. I'm with Bank of America, so it just makes sense to have all my accounts on the same screen. but I've always talked to you guys about not overemphasizing, the importance of the brokerage house. Okay. A self-directed account with Chuck Schwab or Fidelity is going to be exactly the same. It's going to provide you the exact same benefits. Okay. The difference between a Chuck Schwab and a Fidelity is going to be the aesthetics of the platform. Okay. And the user-friendly tools. I know a lot of people have talked very, very highly about TD Ameritrade and the tools that they have open and available to new investors to help and assist with your stock trades. Okay. Merrill Edge has some really good analytics. They've got some really good analyst reports, things that I enjoy and I'm familiar with. Okay. But outside the aesthetics of the account, don't overblow, thinking that you're going to fail with Fidelity if you go with Fidelity as opposed to Charles Schwab. Okay. It's not like that, guys. We're talking about the best of the best, and you can win with any of those 5 brokers. And a lot of brokers that have come through and offered some other offerings in the community has been Ally Finance, right? Betterment gets brought up quite a bit, quite significantly different a little bit, because they invest the money for you on an algorithmic basis. And they charge you a quarter basis point to do that. So it's a little bit different in that you're probably taking on a little bit more expense than I like to see. Because I think you can set some of these long-term passive assets up and they don't need to be tooled with at all. So go ahead and just go with a good self-directed account with any of the 5 major brokerage houses that I recommend, and you'll win. You'll win. So thank you for that information. I appreciate it. Good to see you doing live stream. I threw this down because I wanted to address the audience before I took up out of here for a month. This will be the last live feed I do for a month. So you're very welcome. I always really like to take a little bit of time to pulse in with you guys. I really feel like I've got a vested responsibility of putting out, the support for you guys. And I hope you look at it as just that. I really think it's kind of cool if you're part of a self-directed community to kind of have that support structure or network. And it's really kind of nice to pulse in. When I get back, I'll be doing my weekly live streams Friday at 9 o'clock Eastern Standard Time again. And I just think that's a cool opportunity for people to come on and just kind of throw their ideas out there. Maybe I say something that kind of you didn't think about, and you take that and deploy it. And that's what I always say, man. I want you guys to take this information and use it liberally. Okay. Don't think that you owe me anything, because you don't. The only thing I ask for in support, if you feel like you want to repay me for offering this information, is number 1, to share the message. You share the message. That's the big thing. And number 2, just show your support for the channel and helping kind of spread the word out there. That's really the big thing. Don't leave hate. That's all I ask. And I've got a pretty loyal subscriber base, guys, that are really looking at the message and really coming through for me. I really appreciate all the support. It's very, very cool. I've got Mike, who's hitting me up on a bunch. He's got a block of questions here. Have you ever bought a stock priced under $20? How about $10? Maybe trying to find a hidden value. I have. I really tend to try to gravitate toward those companies with multi-billions of dollars in market cap. And you have a hard time finding some of those value plays under $10. Okay. And I think, Mike, this speaks to what a lot of, now I did this when I was a new investor and I didn't know any better, and I lost my ass. I mean, I had to sit down with my wife and tell her I lost $3,000. Now that was penny stock trading. So significantly different than what you're talking about with trying to invest in, let's say, a Sirius satellite radio, right? Or a Chesapeake Energy, okay? Or an NDRO oil trust, right? Some of those oil service provider names are really got beat up. You guys saw the reverse stock split on Sea Drillers, okay? That was at 15 cents before it did its pre-stock split, and it went to $25, and it adjusted back quickly to $16 a share. But I really typically don't try to outsmart the stock market. I've been burned more times than I could say, Mike. That's the problem. So, I would rather look at a $20 or $30 stock. Let's say a $30 stock right now at Comcast, which is trading at 6.5 times right now. You can pick up shares of Comcast at $30. You pick up shares of AT&T right now, in the low 30s. God, guys, if you've paid any attention to the Blackstone Group, there's a stock right there that's just been on an absolute tear. So my patience is really paying off in Blackstone Group. Blackstone Group now is still in the low 30s, mid 30s right now, because it's really been on a nice tear. It ran up 10% this week. I really don't know why. But I've made a nice healthy dividend of around 6 to 8%. It does fluctuate as being part of that limited partnership. But I tell you what, the majority of my shares, if I'm thinking to myself, what of those stock holdings right now that I've got that probably have the most value, I hate to say General Electric, but that's the lowest stock price that I have right now in my portfolio. And the time to invest in a stock is when everybody's beating it up. But I tend really not to look at bottom picking, or trying to pick Under Armour up when it fell down and trying to catch a falling knife. I don't typically try to do that, but certainly if you have offerings, throw them out there. I'll respond to you in my most honest, but as a value investor, my portfolio is indicative of being a value investor first, having some very, very aggressive growth positions. I do own Google, I own Facebook, Apple, some of the higher growth beta names, some of those to get me some growth in my portfolio. But, my value plays are just some of the old boring stocks. Waste Management, that's the most boring stock I've owned, but it's a quality company and I want to be part of it. McDonald's, Home Depot, Costco, some of these names that have been around forever, Wells Fargo, Walmart, Google, Facebook, I've mentioned Apple computers, right? That's just some of the very few holdings that I have in my portfolio. And the bigger and more boring they are, United Technologies, took a couple positions in defensive names in Lockheed Martin and Northrop Grumman a few weeks back. And I'm just happy to own those quality companies. And I highly doubt that I'm going to enter into those companies and they're going to stay static the rest of my life. I'm willing to hold them wherever they go. If Northrop Grumman takes a leg down, I'll just own the stock long term. Lockheed Martin, same thing. And that just as a value investor, give you an idea of kind of some of my thought processes that I go through. I'd rather pay $150 for 10 shares of McDonald's any day than try to pick up 1,000 shares of a stock in Sirius satellite radio, or a Pandora. I think Pandora right now is an insane value. And that's below $10 right now. And so I do look at those stocks for entertainment. I do look at them. I've taken positions in some of those stocks to try to get a quick trade and a win out of. But as far as being investable situations, I don't usually put those lower beta names in the investment category. I always just put those in the tradable range. And if I get a quick appreciation in the stock, like a Sears or a Rite Aid, something like that, I get some appreciation, I'll take the profit off the table. I won't stay in those names for very long if I get some appreciation. And the next question that you ask is, how do you feel about spider ETFs? I'm not really a big fan. I kind of own one right now. Spider ETFs, for anybody that doesn't understand, is one that really invests in one specific sector, okay? So if you want a spider ETF that covers retail, if you want a spider ETF that covers, discretionary or the transports, right? And you invest specifically in that sector or even subsector, you can get a spider ETF that invests in lithium batteries, okay? It can be a really, really good way if you want exposure to, let's say, the lithium battery market or solar power, okay? Or the MJ industry, right? You guys know what I'm talking about. That may be a really good way to get some sector exposure to the MJ industry by going with a spider ETF that covers just those offerings that offer those particular suite or basket of stocks. The problem I found with spider ETF investing is that if you take a downtick in that specific sector or subsector, you're going to get burned twice as bad. And I recently experienced that with my ETF that I owned with the Vanguard's utility ETF, which is VPU, where the utilities, I just bought it at the wrong time and it really took a haircut. And I'm just waiting the ETF out. It's actually come up quite a bit as people have stopped beating up utilities, but it kind of went into one of those, I don't know if it was really that secular of a downturn. But if you invest in that specific spider at the wrong time, let's say technology, and technology's kind of run its course and technology goes on a downturn, you're going to kind of pay in that sector ETF. So it's not something that I really advocate for, especially for a new investor. Now, for an advanced investor who has a good baseline, who has some really good cornerstones in the portfolio, if you want to buy that lithium exposure in there, keep it to a lower exposure and buy it. Buy the sector spider ETF. That's totally fine with me. But it's not going to fit in everybody's portfolio, and it's not something that I recommend very often on the channel. But thank you for that question. That was very cool, Mike. Thank you. Do you recommend Robinhood? In the long and short of things, I do not. Okay, and I've made videos on the Robinhood app, and I can go in depth. I kind of gave at the top, if I'm dealing with Cashmatic, really cool question. This gets asked all the time. I've made videos on the topic, and I did address this topic at the top of the live feed, and you probably weren't part of the community at the top, but I just think M1 has a superior product, okay? Robinhood, you can't buy partial shares. Robinhood, you can't even get a retirement account. And that really should be the preliminary account that people are starting. And I think all too often, the allure of getting free trades in the stock market are getting people to invest in Robinhood because everybody's got a smartphone and it's really easy to download the app and it's really easy to sign up. There's really no minimum to play on Robinhood. So I think a lot of people are unknowingly starting Robinhood at the expense of doing a little bit of homework and maybe taking my advice. Take my advice. Start the retirement account first, okay? There is a very, very deep validation for that very, very specific opinion that I have on this topic, okay? So if you value my opinion, please do yourself a favor and start the very best account that I recommend on this channel, on almost every single offering that I offer, and that is the self-directed Roth IRA account. And anybody who has $5,500 or less per year to invest, anybody with less than $130,000 in income is eligible to invest in a Roth IRA. And that is, quite frankly, the majority of people that I talk to on my message. I do have a few folks that are making six figures. Hell, I probably have a few people, hopefully, who are tuning into me, who are making seven figures. I'm all about that. The information is relative to all people. It really doesn't matter. But if you are in that vast majority of camp, like I am, who make less than six figures, okay, I was making less than 50,000 for a long time, and I've just now kind of come into a pretty good income. But if you're making a salary of 25,000, 35,000 a year, you really need to look to take advantage of that benefit that the government gives you. Okay. It's not like, oh man, I got to go start an account because Ryan said. No. Every year that comes and goes is a year that you're foregoing that benefit back to the government. The government is basically saying, look, you pay the tax up front, and then you can set those dollars free in a Roth IRA account to grow unobstructed going forward. And down the line, 40 years down the line, you're going to get to take that money free of charge. We're not going to bother you because your obligation has already been satisfied up front, right? So you do not want to forego a good self-directed Roth IRA account for a Robinhood account. Okay, thank you for that question. Very cool. I enjoy your channel. Great advice. Thanks for sharing your knowledge. I'm not the smartest guy, guys. I'm not. I'm talking about my very favorite topic, and it's something that I won't talk about a topic unless I'm very, very knowledgeable about that topic. And there's a whole different spectrum of what people think you need to have as far as knowledge in investing. I really think my knowledge and my expertise is really, really specifically polished on the self-directed side. And I do have a really good ability to sit across from somebody and maybe understand if somebody's in somebody's shoes that is a new investor and they're looking to start in the stock market. I understand how to reach those people. Why? Because I used to be one. All right. And I am very insistent on not talking at people. I'm very insistent on talking to people. And there's a big difference. All right. We've been going about an hour and 20 minutes, guys. I'm going to spend the last 10 minutes on questions here to the right, guys. Thank you so much for everybody that tuned into the live stream. I'm sure these live streams get viewed. They're really popular after I put them on YouTube. A lot of people can't catch the offering. A lot of people are tuning into the channel from not only in the United States, but international as well. So for you guys that are not only supporting the live stream after I put them online, thank you to you guys specifically that actually spend your time coming in here on a Saturday. It was a busy Saturday for me, but I wanted to address the community one last time before I took this 1 month to myself, as I've got a professional obligation that I need to meet for the next month. I'll be out in California. Hopefully I can taste some good wine. I want to go to the Napa Valley, but I will be out there and I will be indisposed and I will be unable probably to even respond over YouTube. So continue to share the message for me, guys. Anybody out there that you know that is looking to start in the stock market, looking and maybe thinks that they don't have enough information in the stock market or enough knowledge, none of that's true. None of that's true. And you can start as slow or as fast as you need to get yourself the information to make you feel comfortable about entering into the stock market. Do you use technical analysis when trading? And if so, what are your patterns and strategies you like using the most? I use a mix of technical, but more fundamental analysis, honestly, David. I tend to use the technical analysis that's put out there by the technicians, honestly. But to sit here and tell you that I use technical analysis and review certain stock patterns or chart patterns as an indication on whether or not to buy a stock or not, that would be a little bit, it's not the only thing that I use, okay? I cover really just the highest quality stocks in the stock market. That's what I try to do, okay? I try to look at where a stock is with regard to its 52-week channel, okay? When a stock is, at its low, where a stock is trading in accordance with its PE multiple, what its beta is. I certainly look at stock patterns like Walmart right now, for example. You look at its high at 103 and you look at it right here in the low 80s. Would you look at a stock and find that because of its technical analysis, you would enter Walmart right here? I would say yes, but from a technical perspective, that may not be the case, okay? It may be in a down channel, or it may have broken some resistance. I would have to look at the chart to get you a better indication, but that is only part of it, okay? I tend to not look at technical analysis as a primary decision maker for me. I look at a lot of analyst reports. I do not blow off analyst reports like some other channels do. I do look at analyst reports. I do look at recommends to buy or sell. I look at that stuff. But really from a fundamental perspective, is there really a right or a wrong time to enter into a good quality stock like Walmart? Not really. There might be an opportune entry point to a certain stock, right? But if you've paid attention and tried to get an opportune time to enter into Amazon this year, you would have been sorely mistaken. Amazon provides brief entry points and then returns right back to its all-time high again. So when you're talking about trying to find an entry point in Facebook or an entry point in Amazon, or even an entry point in Apple, which has been really difficult, it may have provided you a short one over the last week. It's been really, really difficult to do. So I hope that answers your question. Honestly, I take kind of a collective a collective approach to what I'm looking at, and I look at a lot of different things. But when it comes right down to it, if I want to buy 3M, I will buy it. I will look at all the things that I just looked at that I told you about. Look at this. Look at the chart on Comcast right now. Look at the chart in AT&T. Look at the chart in General Electric, for crying out loud, right? You may look at that from a technical perspective and say, gosh, the stock, it may be washing out right now. It may be a time to take a stab, but it may continue down, right? So I've got the person that actually referred M1 Finance to me. I've got the financial investor on the line, which is one of my endorsed channels. If you guys are new to the subscriber group, certainly I endorse those channels. Kick over, support that message. Benjamin Levy is another one of those guys that I've endorsed on the channel. He says, yo, yo, yo. He says, yo, 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 because he's a young kid. But I tell you what, man, I give Benjamin Levy a lot of credit, man. If I would have had half the savvy at his age, honestly, and I think he really has a lot of power in resonating with a lot of young folks who, if you guys want to take a young investor and start them in the stock market in the right way, you cannot start to learn some of these fundamental premises earlier on in life. And that's a lot of the reason why I support Benjamin's message. I support Brent's message also for a lot of different reasons, but Benjamin has the ability to not only talk to those young investors, but talk to them as somebody who is a young investor. So very, very important. Thank you, Benjamin, for joining the group here. I really appreciate that, man. Nice as usual, Ryan. Thank you, Diamond. Very cool. I'm on my either YouTube channel. Great content. Thank you so much. I appreciate that, guys. I've got Mike who hit me up with another question. Yes, you answered my question. I was referring to Sirius. Okay, cool. Yeah. So, I mean, that was the stock I used an example. I've invested in Sirius XM, and I've failed to figure that stock out. I've probably made a little bit of a trading money, maybe $100 or so. And then I'll trade right out of the position. Sirius is a cool company too, actually. I actually think there's underlying value in both Sirius and Pandora. But the last thing I want to do is put forward a stock pick like that. And I have to be really careful with the message I put out there because, you know, I just got the highest tip I've ever got on this channel, man. Greg, thank you so much, man. I really appreciate that. And thank you for all the dialogue. Me and you went back and forth on our dialogue this week, man. I really enjoy your comments. I really enjoy our conversations that we have. And it's really cool that everybody gets to view that in the community, Greg. Thank you so much, man. I really appreciate that. I hope your 4th of July was good. Thank you for tuning into the live feed. This helps me as much as it does you guys. You guys have to understand, man. I am just a subscriber to this message as well. I'm part of this community. I want you guys to feel like you're part of something special. But that's really cool. I really appreciate that, guys. You guys know I don't do Patreon. I've had a few folks beat me up over not having Patreon. I just don't want to underpin the integrity of the message that I'm trying to put out there for you guys, that if I'm asking for financial compensation from my viewing audience, that's $1 less than you guys could be putting into your program, okay? And it undertones the message, man. And I think a lot of people would have a hard time with that, me included, honestly. And I don't want to sacrifice the integrity of the message by putting a tip jar out there. I may build and evolve this channel. The Independent Investor channel is not going anywhere. We are securely concreted into YouTube forever. Okay, and I intend on doing this channel for the rest of my career and into retirement, okay? And I envision a community of self-directed investors going forward 10, 20, maybe even 30 years from now. Who knows? Maybe we will have a free retreat someday in Las Vegas, right? And we will all get together someday and we will all meet each other. Because the cool thing about social media, man, is it brings people together on a common idea. And that's something that somebody who wasn't on social media up till a couple of years ago has really, really understood about the power of social media, putting a niche message out there so that people can really resonate and benefit from information that you would have never, ever come across if you hadn't come across, let's say, the independent investor channel talking about self-directed investing, right? So very, very cool, man. Greg, thank you so much, man. That means the world to me. It is unnecessary, but thank you so much, man. I really appreciate that. That really helps compensate for my time. Not only that, but help to get back some of my initial investment in the channel. So thank you so much, man. I'm in debt to you guys. Thank you so much, man. Hey, Ryan, would you buy Starbucks with a 3.0 yield trading at a PE of 16, down 17% in the last 3 months? I feel like the price drop took it from overvalued to at least fairly valued with a good yield. Officer Towers, the answer is yes. Starbucks is a buy right here. You're going to have to be patient. This is what happens when a growth company changes from growth to growth and income and getting into more of a value play, okay? Starbucks is closing some restaurants, okay? I am an advocate consumer of Starbucks product. I love Starbucks. I'm from the Northwest. I've actually been to Pike Place, the real Pike Place. So visit it in downtown Seattle if you ever go. Actually, Tully's, I like more as a coffee shop than Starbucks, but Starbucks has a wide moat. They're doing some fantastic things with their brand loyalty products that they offer, you know, ordering online. I sat for a second in downtown Norfolk here in Virginia, man, in the Starbucks before I reported aboard to my new unit. Really cool stuff, man. Just sit back in a Starbucks and watch how they operate, man. They're very clean restaurants for the vast majority, and hell, they better keep it that way. These are things that I pay attention to as an investor. You know, the stores are clean. They're inviting. People like to go into it to take care of their business, read a book, open their laptop and enjoy free Wi-Fi, have their latte, have their coffee, whatever. The brand loyalty is there. I love Starbucks. I really do. Currently now, I am not a stockholder in Starbucks, but depending on the portfolio makeup, remember all the fundamental premises that I've already talked about, Starbucks can fit in a number of portfolios on the long. Okay, don't try to trade in and out of Starbucks because right now it's going through some pretty volatile times. And I often say, don't try to catch a falling knife because as soon as everybody gets washed out in Starbucks, they're going to start to it's going to start to pick up some buying interest, if not already. There's some buying interest in Starbucks. I would buy Starbucks right here and put it into kind of the discretionary section of your portfolio. Remember, it's just a part of a portfolio. All right. Don't take and buy 900 shares of or 1,000 shares of Starbucks and then get angry when it takes a 20% downturn from its current levels. Okay. But definitely, if you want exposure to Starbucks, remember, passively aggressive right now. Okay. If the stock market decides to correct on us, guys, because we're entering into some tariffs, it doesn't matter how strong a stock is. These good quality companies are going to suffer. All right. So just be careful. All right. With your specific allocation. But right now here, gosh, 10 shares, 30, but I don't know what Starbucks is trading in. I think it's in the low to mid 40s. You guys can correct me at mid 40s, I believe, upper 40s, I believe. Right. So 10 shares run you about $500, give or take, right? 20 shares at $1,000. I'd start with the 10 share position, man. If you want to invest in it, take a 10 share position at $500, man, and let things run, set it up, enjoy the dividend. As you point out, they're running at a 3% clip right now. Set it up on dividend reinvestment, man, and become an investor in Starbucks. I'm all about it. I endorse that move. Awesome question. Thank you, Officer Towers. Very cool. Appreciate it. I'd be retired like him early. Yeah, no doubt. I think I skipped over. You guys hit me with a ton of questions right at in the middle here. I'm sorry. Let me review real quick. Any idea what good entry for Texas Instrument would be? Yeah, you're not going to get a very good entry on Texas Instruments or Adobe Systems, man. Those are two of my favorite companies that I do not invest in. I think you would be fine entering into Texas Instrument at any time. It's one of those very, very solid elite companies out there that if you want to be an investor in Texas Instruments, man, just buy the company. It's one of those elite technology companies out there, man. Just buy the company if you're interested in it. So don't try to play the whole entry game. I'm off the pulse of what Texas Instruments has been doing here. Has it taken a downturn, I believe? Guys, I pulse into the stock market, and I'm pulling all this from memory. All right. So I've got a pretty good pulse on where some of these stocks are. I'm addressing K97, who's one of my most, I mean, I don't think you've missed a live stream. So I always try to pay attention to your questions as well. But Texas Instruments is just a solid company. I'd like to know what their market cap is. The 25 billion, I believe, in market cap, 50 billion on Texas Instruments. They're an enormous company. I think you'd be safe over time investing in Texas Instrument. Hold it in a self-directed account as usual, right? Make sure you've got a diversified base. But Texas Instruments is going to be one of those positions I end up taking here pretty quick. That and Adobe Systems, two of my favorites. I should have invested in Adobe when it dipped down to 150. It really took a haircut. And those are the opportunities that if you pay attention to the stock market and monitor the stock market, those are the opportunities that you really want to take advantage of when they're presented in these good quality companies. Please join the Self-Directed Investor group in Facebook and click on the like button on your way out. Thank you very much. One of my very loyal subscribers right there. I don't think you've missed a live stream either, and thank you for that. I really appreciate it. I've got some really, really cool, really Ernesto, and I've got Jared Odell, and I've got some other guys that really help me carry the load for me in the Facebook group as I've been off the cuff. But there's really good information in that Facebook group, and just go on there and join it. I approve the applications. I've only kicked a couple people out of the group. I do not want the group being spammed. I don't do it. So I don't expect that my members are doing it, but there's 300 members over there in that group. Certainly one of the benefits of the channel, free of charge. I put the start of my portfolio building tools on that, providing you your different options for looking into, your passive options, your stock options, and everything in between when you're looking to build a portfolio from scratch. I've always said that that's kind of the fun and entertaining part of investing. I think a lot of the things that are missed, especially through YouTube, and I wish a lot of the channel creators, man, I just did a comparison between the Independent Investor channel and Jeremy's channel, the Financial Education channel. I really wish that he would talk more about those things on his channel, because he's got such a huge audience. And he's got such a powerful, he's more energetic than I am, right? He's got a lot of charisma and a lot of people resonate with him. And I think he would really benefit from focusing on a lot more of the fundamental aspect of portfolio building. If he would just do that, focus a little bit more on that, as opposed to more of the stock picking side of the house, But thank you for that endorsement. I'm so happy. Subscribed. Thank you, Diamond. Appreciate that. Hey, we aim to please, man. A lot of those rapid fire things, those are pretty easy, but I want you to take a deeper meaning to this YouTube channel. I want you to feel like you're part of a community here. And you may get tidbits of information here and here and here, but over time, I think you're really going to validate for yourself why you're part of this community. And that to me means everything in providing value to every single member who chooses to consume my content on the Independent Investor channel, man. I'm glad we could deliver the goods for you. No doubt. I'm very passionate on doing just that. I have 3 channels and I'm on my personal channel. Awesome. That's really cool. I may go back and pick those up if you're talking about your 3 channels on YouTube. That's really, really cool. I'm a relatively small channel, and I'm probably screwing up a bunch on my search. I would love somebody who knows what they're doing to go in, because I'd probably blow up if somebody did, but I do the very best I can. There's not a YouTube manual that they offer you and says, here's how to build a successful YouTube channel. You're all on your own when you do this. It's tough. It's really, really tough, man. Meeting 5,000 subscribers is really a cool thing, man. I would have never have thought, that it would have been possible after a year. And I've worked really hard on the channel. But I just wanted to thank each and every one of you guys. Those guys, first and foremost, who have been with me since the beginning. I'm going to be signing off here in a couple minutes, but especially you guys, too, who have come to the channel brand new by nature of referral. I know Ryan Scribner has highly endorsed my message. He knows the integrity of the message, and he resonates with it. That's why he backs my channel. I do this to help people And I think he respects the niche that I put through on the message and recognizing how much that can help, especially new investors getting involved in the stock market. I've got Officer Towers again. Hey, Ryan, would you buy? Oh, I've already addressed that question. I'm going to kick down here. Benjamin Levy here. See you later. Gig to a workshop, teach some people about personal finance and stock. I will get back to you once I switch my focuses from podcast to this. Awesome, man. Good luck with all your endeavors, man. The sky is the limit to you, man. And really kind of cool to meet each and every one of you guys. You know, I think a lot of you guys are consumers of the information, but a lot of you guys are creating your own content in and of itself. And, you know, I support everybody. I think it's really cool that we support each other on the community and talk about this topic, as I feel like it's a topic that doesn't get talked about enough. It really doesn't. And this is how regular people empower themselves, to put it quite simply. All right. Remember the Queen, I've learned so much with you. Hey, thank you, man. No doubt about it. I put a lot of good information out there, man. And if you're willing to listen and just open your mind a little bit to a new idea, there's a lot of information that you can take and use for yourself. That's absolutely cool. I've got Joe down here at the bottom here. Ryan, I've learned a lot from you. You got me back in the basics, which I never even understood in the first place. Yeah, you got to start with the basics, man. And I went through the school of hard knocks as well. Lost a good amount of money, at least at the time. $3,000 was $3,000 that I did not have to lose. And going through those, I know Jeremy just put out a video of losing $147,000, man. I tell you what, man, and I don't give him a lot of credit. I don't. I actually disagree with some of his message. And quite frankly, I'm entitled to my opinion. He can disagree with my message, but I give him a lot of credit in coming back and bouncing back. And it appears as if he's doing what he's trying to do and coming back from a hole like that of $147,000 loss in the stock market. I give all the credit in the freaking world for somebody who has the fortitude to fight through something like that and come back fighting, man, to start the successful financial education channel that he's did. Pretty cool. And I commented on his video. I basically said, yeah, that money's gone and it's lost. There's no real reason to dwell on it, but there is some underlying or underpinning message that comes from learning from that mistake and going through it personally. I would just hope for you guys that you really listen to the message, and hopefully the mistakes that you make are either eliminated, which I don't think is necessarily possible. You will make mistakes and you'll be like, God, why did I do that? But really just to minimize the impact of those mistakes, learn when to hold and not panic and sell. You know what I mean? And you can really look to minimize and look to preserve the wealth that you're working so hard to grow over time, right, guys? Congrats on 5,000. You betcha, man. I'm all about it. It's a pretty cool milestone for me. I take payment on a lot of different ways on this channel. I know a lot of you guys appreciate the fact that I don't ask for your money. I don't charge you for a monthly pamphlet. I think a lot of that is crap. I think a lot of this information that I regurgitate to you is openly available on the stock market. I think the value in the content that I offer is specific to self-directed investing and the fact that I do it, right? So I can talk about this all the time. And that's the real value. And I do feel like I'm not looking to undervalue what I'm putting out there. But I feel like there is definitely a lot of value to a lot of people in that specific piece that I bring to the table on my channel. I've got Joe on the line. He's got two questions here and they're pretty involved, but I do want to get to it. And I'm not on a time agenda. Hell, I could talk about money all day. I know it would make for quite a live feed if I put a 24-hour live feed on there on YouTube. Hell, I might try to do it someday. Might be kind of funny to put like a 4 or 5 hour live feed just to throw a big elephant, into the YouTube machine. I think it'd be kind of funny. But Joe hit me up and says, Ryan, I've learned a lot from you. You got me back into the basics. Yep. And then right below, I want to ask your opinion on KR. Kroger, you bet. It's awesome. One of the biggest grocers in the United States, one of the biggest employers on the grocery side of the house. And then they have Fred Meyer. For you guys on the West Coast, you guys enjoy Fred Meyer out there. Kroger is the owner of that. And also, what is the difference between VOO and VUG. Not a whole lot. VUG, I believe, is it's a dividend payer, correct? I'm pulling this from memory. VOO is a weighted ETF that exposes you to the S&P 500. It's a weighted index. So the highest market cap is going to get the highest allocation of dollars, okay, which is going to be starting obviously with Apple as the highest market cap in the S&P 500. Then it's going to work back, and it's going to work its percentage of allocation. If you took 100% of the allocation that's going to be devoted to 507 different companies, all right, the largest amount of percentage is going to go to the largest amount of market cap in the S&P 500, and it's going to work backwards in succession until you get to the lowest percentage of allocation in the S&P 500 in company 507, right? And that's going to have the lowest percentage of allocation in the S&P 500. And what VOO allows you to do is expose yourself to all 507 of those companies, okay? So I recommend VOO all the time as being that product that you can purchase. Let's say 10 shares of the VOO is going to run you $2,500, which is an absolutely beautiful starting position in any self-directed account, okay? A lot of people talk to me, can I invest with $500? Yes, but honestly, anything less than $1,000, I would just look to build up a cash position. So when you buy VOO, you can take a larger share position and let's say buy 5 shares, right at $1,250, as opposed to just buying 1 share at a time, okay, when you start. And I understand you have to start somewhere, but that's the VOO in essence, okay? Now, the VTI is the Vanguard's total index, okay, ETF, okay? Don't get confused. It is an ETF. It's traded under the ticker symbol VTI. And that's representative of 3,600 companies across it's international, okay? It's a broad stock ETF, okay? The idea behind both of these companies is that you are realizing diversification right away by purchasing the S&P 500, okay? And I know the VOO runs at around $250 a share. And a lot of new investors are like, whoa, 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 $250 a share, that's really expensive. Yes and no, it's relative, okay? Please keep in mind that by buying 1 share of the ETF and VOO, you are buying the entire exposure to that index, the S&P 500, all right? So it's so much more powerful, that 1 share of a $250 stock, as opposed to buying 1 share of Lockheed Martin, okay, which is 1 singular stock, okay? Because the power over here is you're going to have exposure to all those stocks, and you're going to enjoy the defensive positioning on true diversification by owning the VOO, okay? So I hope that answers your question. I could do an entire video on VOO. VUG is just another, I believe that's a dividend weighted ETF on the Vanguard's website, if I'm not mistaken. I believe it carries a 0.08 expense ratio. It's a really, really good fund. If you wanted some dividend exposure, you could go with that. But just keep in mind that that is going to be a little bit more weighted toward dividend payers, okay? Where I would rather see you buy a total stock ETF or a total stock index, okay? And then maybe look to buy either cornerstones in single stock exposure, right? Buy a single stock of Apple, buy a single stock of JP Morgan Chase, buy a single stock of Disney, buy a single stock of JP Morgan Chase, J&J, buy a single stock exposure of Procter & Gamble, okay? As opposed to looking to buy VUG, okay? Because you may run the risk of having some overlap in having diversified exposure on the VUG side and having diversified exposure on the VOO side. I would almost rather see you own the VOO and own some single stock exposure. Yes, that's held in the VOO, but there's going to be some real inherent benefits in owning that single stock on the dividend reinvestment side and definitely the capital appreciation side, okay? Because you own that single stock, all right? You're going to enjoy 100% of the appreciation of, let's say, that Apple stock over time. Whereas in the VOO, you just own a couple percentage points of exposure to Apple. Whereas if you own Apple, congratulations, you own 100% of those shares of Apple. So it's going to perform, and you have the highest ability to outpace the market going over time. Or should we be considering both? Thank you again. I think I answered your question there, in that you could own both, but really, you can kind of go either way with that question, okay? Also made a request to join your Facebook group a few days ago. I think I responded to you, Joe. If not, I check it periodically. I will absolutely. It's nothing personal, man. I've just been really, really too blocked here with my schedule. I will approve you, man. Go in there right away. Thank you, Joe. I appreciate. That's an awesome vision, champ. I can already see it. Yeah, it's going to be a lot of fun. Conference meet October 2020, MGM Grand. That's awesome. I give you a little tidbit personally. I was married on the top of the stratosphere. So yeah, the MGM Grand could work, I guess. I'll have to think about that for a venue. It's definitely not going to be the Hilton. I know Jeremy's doing a big conference here December 1st, I think. He's doing a dinner and a conference, I guess. Graham Stephan's going to be there as well. Just another channel creator that puts out content that I'd really like to know a little bit more about his background, where he comes from with regard to the real estate information that he offers. Because I have some questions about how somebody just jumps into real estate and maybe has started from me, like from scratch. I started with nothing. I've been given nothing in life. So that's one of those things that I want to make sure that, there wasn't a head start there before you enter into, a big fish, a big pond has a little fish, and make some success out of real estate, because that's something that I do not advocate for. There's a lot that can go wrong in real estate. There really is. But they're doing that. And so we won't do the Hilton. I'd like to start a channel, but I always feel like I want to learn more before doing so. Yeah, Greg, this is something that I didn't set out to start the Independent Investor channel with really any idea of what I was doing. What I did know is that I love the topic, and I knew that the topic was infinite, okay? And I think a lot of other channel creators, when they talk about money, I think they kind of back themselves into a corner a little bit, because once you expire your first 10 videos about dividends and what stocks to buy and portfolio building for beginners and, all the same cliche BS that they put out there, once you kind of expire those topics, then what? I kind of sit back sometimes and I'm questioning, do you actually freaking do this? Because you should be able to talk about this topic infinitely if you do this for a living. And my niche is even easier to talk about, because I feel like a lot of other programs talk about invest in single stock in a brokerage account. And I think that's the wrong way to approach investing. So I think a lot of people suffer from putting that wrong way of investing out there. And they suffer when some people come back and say, what about tax implication? What about retirement accounts? And those channel creators don't know how to respond to that. And I just am like, oh God, you're reaching 50, 100, 150, 250,000 subscribers. And every single one of them think you're some sort of a stock god, and you're putting out information that people are going to act upon, and you fail to acknowledge the responsibility of that. And people are going out there and they're getting themselves into trouble, So it's a little bit different in that I'm really, really sure about the information that I put out, that if you start, you can really empower yourself going forward, especially if time is on your side, that's something that I really take wholeheartedly is that I put this out there with no reservation, none whatsoever. And I offer the opportunity for financial planners to come on and challenge. I'm sure that somebody could come on and be like, what about this beta? And hit me with some bullshit technical analysis that I don't know about. The problem is there's a fundamental difference between the agenda of the financial planners and my agenda that I have on the Independent Investor channel. There's just two significant divulging paths between the motives of these folks over here and my motive over here. It's that simple. It's really that simple. Congrats on 5. Thank you so much. I'm subscribed on all 3. Yep, thank you. Never miss a beat. Jared Odell he's one of the guys who's really helped me carry some of the weight in the Facebook group. Really, really cool. Rebecca Livemore hit me up and said that the VUG is high growth. Thank you so much. You are absolutely correct. I get these ticker symbols screwed up, and sometimes I have the Vanguard's website. I have it as a quick link. I usually have it open when I do these live streams so I can refer to these, but VUG is high growth. And that's really a good way to play the Facebook and the Googles of the world if you just don't want to buy those single stocks and you want to have a certain percentage of your portfolio allocated to the high growth. Rebecca, thank you so much for that comeback. You're absolutely correct. It is high growth. Thank you. You've helped change the direction of my retirement future, and for that I thank you. Jared, no doubt about it, man. I would say you're welcome, but easy money, man. Easy money. And I know a lot of people thank me and maybe they imply that it's all me. I put that back and say that it's all you. It's all you. You know, anybody who has a little bit of inkling to become an investor can hear my sincere message and say, hold on a second, man. Is this legit? Ground truth it. Is the prospects of what this guy's talking about legit? Is this guy saying that I can start an account and I can manage it myself and I can save on all of the fees and I can put myself in a position to accelerate my growth going forward? I'm going to tell you that's true, but it doesn't resonate with you unless you have done what you have done, Jared, in that you've taken this information and made it make sense for you. And I applaud you, man. I pat you on the back because you are going to never forget the day in reflection where you look back and say, wow, I made that decision and I regret it. You will never, ever do that. You will always look back and say, I remember when I became a self-directed investor, and I'm so glad that I made the switch, or at least I'm so glad that I met somebody who at least provided me an option that I could research it on my own and validate it on my own, because I know how smart you are and I know how you've taken this information and just quite put simply, it just made it make sense for you. And that is a really, really cool thing. You're just a testament of what my fundamental goal has always been on this channel, and that is to empower individual investors. So thank you for that, Jared. I really appreciate it. Do you recommend VTI over VOO? Really kind of just depends on your risk tolerance, Rebecca. If you have a little bit more risk tolerance to the stock market, you can go with the VOO, which exposes you to just the S&P 500, which is really the US stock market, okay? And then if you had less tolerance, which means you really don't like to see your money fluctuate up and down all the time, I would go with the VTI. Now, make no mistake about it, the VTI and the VOO are both invested in stock, okay? It's just that the VTI is going to spread you out and diversify you a lot more across 37 or 3,600 stocks, as opposed to the VOO, which is our S&P 500, which is 507 names. They are both beautiful products. They are both beautiful products, but just depending on what it is that you have self-assessed, what you want, what your risk tolerance is, you could house either one of those two assets in a nice self-directed account for yourself, and you wouldn't have to touch them ever again, Rebecca. Those are investment assets that are offered by my favorite brokerage house, which is Vanguard. And Vanguard is the one that I recommend exclusively. Why? Because they're the best. I don't recommend a whole lot of other. You can win with other S&P 500 ETFs. There are others on the market that are offered, but VOO, quite frankly, is the best. It has the lowest expense in the industry, and it's going to expose you to the exact same names as the other ETFs from other brokerage houses that other brokerage houses are offering. And some of those are at a higher expense. They really are. So you have to be kind of careful. And the 0.04 of expense ratio on the VOO is acceptable. VTI carries the same expense ratio of 0.04. So both of those can really get you done. But I think it really can kind of come down with your risk tolerance. So if you wanted to be more of a safe investor, I would go with the VTI. If you had a little bit more tolerance to risk, then I would go with the VOO. Thank you for that question. That was awesome. Totally understand. Thank you. I know, figured you're busy. I am. I'm going to hop on my phone actually right after this, and I'm going to approve you, Joe. Thank you. I think you need to be really honest with where you are in the journey. If you make videos about it, a sort of sharing your journey rather than telling everyone what to do. Yeah, I agree. And that's part of, Rebecca, what I talk about just talking to people. You know, I hesitate to put my portfolio out there because I hope that people don't think that it's braggadocious, right? I've been in trouble with the IRS twice in my life, okay? I've owned multiple thousands, 5,000 and the other for 7,500, both times with IRS. And I've clawed myself out of those problems, you know? So that's why I talk so much about tax implication and setting up a good budget and having a cash nest egg set aside. Why do I do that? I don't do that because I'm telling somebody what to do. I tell people that to do that because that's what I do, right? And I agree with you 100%. I just think there's a lot of messages out there that I kind of sit back and I just feel like I'm being talked at instead of being talked to. And I put so much value in everybody out there on this earth who is listening to this message that maybe get a little bit of smidge of empowerment on the financial side, Rebecca, okay? And I want to premise that. A lot of people think that if they have spiritual health or financial health, that somehow that's going to satisfy their spiritual health, or it's going to satisfy their physical health, right? Or it's going to it's going to satisfy their mental health. And that is just not true at all. I do believe that you have to have a holistic blend of all of those things to be a successful investor, honestly, you know? I mean, I just exercised for 2 hours before I did this live feed, you know? Those are the types of things that keep me calm and grounded. Those are the types of things that can help me deal, you know, with my day-to-day activities. It keeps me calm, quite frankly. But if you guys want to know a fundamental secret about becoming successful in the stock market, I will start to engage some of those other topics to where if you're a complete disaster on one side of your life and you're a chain smoker and you can't get a hold of your drug and alcohol problem, or, you know, you're abusive, or, you know, those types of things that I know are rampant in our society, especially, you know, and you think that you're going to take my advice and you're going to deploy that advice in the stock market and somehow that's success, because you will have success with my program, okay? But somehow that success is going to somehow bleed over into other categories in your life. You are sorely mistaken. You really are. And I agree with that comment. I really think that's really very cool of a thing to say, Rebecca. Thank you. And I hope that's the way I'm portrayed on my message in a genuine sense. I really do. What's the Facebook group? The link is in the description on, if you go to my channel page on YouTube, you can click the Facebook tab and it will kick you over to the link of the Independent Investor channel. I have a page and I have a Facebook group there, certainly. And it's in the description on most all of my new videos. I've redone a lot of my descriptions to where those links are actually available to you guys. Cashmatic, I tried posting a link to the group, but YT wouldn't allow it. Wow, that's interesting. A lot of people put a lot of links in there, Rebecca, so I'm not sure what the problem was with that. That's interesting. I'm not really sure. Do a search for this self-directed portfolio. Yeah, that's one way of doing it. That'll work. Thank you. Rebecca's problem solving for me. I appreciate that, man. Very cool. Guys, I think I'm going to, I've got one more. Any opinions on realty or Iron Mountain, Brookfield, or extra storage space? Not at this time. I do not. I apologize for that. You're welcome for the input. You made a last comment, Rebecca. I will end on that. Yes, I was referring to the question from Greg Gatsby about starting a channel, but I feel he needs to learn more. Yeah, I've watched some videos who are telling other people what to do and they have no clue. Yeah, I think that I've mentioned the idea behind this being a testimonial on here. And I think some people get a little bit self-indulgent, a little bit, in thinking that their message is so important that they need to come onto YouTube and they need to put out, a viral message that makes them a millionaire, honestly. And I don't know what most people's motivation is. Honestly, I just use YouTube as a platform to put out my message because I didn't make this decision, to put this out. It just happened to me. And I believe wholeheartedly we do in life what we are put in a position to do. It's just up to us to act upon them. And I felt a very, very strong internal motivation to do this for people, because I feel like it's a really big void in our society, and that a lot of people miss an opportunity to enrich their own financial lives. And it's frustrating for me because I see it all the time. And I feel like I had at least a lot of good tools to help and provide to people, to provide them that validation, to start using some of those tools and securing their financial future going forward, guys. So thank you, Rebecca. Thank you for your involvement in the group today. Thank you for everybody who's joined the live feed, guys. If you do hit the thumbs up to support the message, guys, I will be offline for 1 month starting today. Thank you, everyone, for the support of the channel, the 5,000 subscribers. Thank you for everyone that comes on and supports the message. Thank you for those folks that I'm the first to pat you guys on the back, that for you guys that have taken this message and deployed them in your financial lives going forward. I appreciate you guys joining in, and we will pick up in 1 month's time and carry on with phase 2 of the Virginia Beach Chronicle of the Independent Investor Channel, guys. Thank you so much for tuning in. Good luck in your financial futures, guys. Thank you. Thank you for everything.